Johnson, real estate broker with the Pioneer Group. Many people come to me and say, Don, I want to qualify for a mortgage, and they say, well, what's involved? And so I've asked Jason Jean, our favorite mortgage machine here, to come in today and kind of give us a basic overview on qualifying, or even what the banks are going to look at. So, Jay, what does it take to qualify for a mortgage today?
Okay, so there's two real quick things that we can look at right off the bat that will tell me if you have a good chance at qualifying for a mortgage. Okay, the first thing that we have to look at, credit. Now, we've got another video on credit because it's a long topic. And a lot of people have a lot of questions on that. We're looking to see if you meet the minimum history. So you have a credit score, and then you have all of your trade lines. And your trade lines will show, okay, the trade line is like a credit card or a car loan, how long you've had your credit. So we're looking for at least, typically they want to see a 2-year history of credit, with the last 12 months of being paid on time, at least.
Right. They're not getting the warm fuzzies lending you tens of thousands of dollars. You can't make your $12 Sears card payment on time.
Or hundreds of thousands of dollars. Yeah. So yeah, it's important to have that history there. If a lot of people say, my credit's perfect. I don't owe anyone anything. Well, that's not. That doesn't help. So make sure you see that. The second thing that we're going to look at real quickly is your job history or income history. Okay. Typically, they want to see a 2-year history. If I go back a year and a half, and a year and a half before that you were unemployed, and that was the end of the story, then you're not going to get a mortgage. You're going to have to wait 6 more months because we always have to go back to that 2-year history.
So they want 2 years history.
2 years history.
Okay.
And then fixed income. Fixed income, is a little bit different. Same job, not necessarily. No, typically they like to see it in the same line of work, but it doesn't necessarily mean it has to be the same job.
Not the same employer necessarily. Okay, so 2 things to qualify: credit and job history. Mm-hmm. So now I qualified. How much what determines how much I qualify?
Okay, so now you're going to jump into a few other things. The first thing that we look at to figure out how much you're going to qualify for is your income. And actually, if you're making a salary of $200,000 a year, you're going to qualify, income-wise, you're going to qualify for more than if you make $30,000 a year.
Gross or net?
Always looking at the gross income because certain people have different deductions. They might contribute more towards their 401k than others. So, we level the playing field. We use gross income only.
Right, because basically they can't discriminate. So when people have the different deductions based on familiar size, that might be looked at as a form of discrimination. So they put everybody on the same playing field. It's all gross.
That's right.
Okay.
The other
documented, right?
Everything's documented. Yeah, I get a lot of people who are self-employed say, "Well, geez, I really make a lot more than that." Well, okay. If I were an undercover IRS agent, I'd probably be finding out a lot of people, but I'm not. So, at the same time, if you're not documenting your income properly with the IRS, then chances are you could
you can't use that.
Right, you're not going to be able to qualify for much if you're not. The other thing that we're looking at too is debts. We're going to pull your credit. We're going to look at your debts. We don't care if you owe $1 million or $100,000 or $10,000. What we care about is the monthly payment. So we're going to calculate all your monthly payments, and we're going to, kind of deduct that from your available money that can go towards a mortgage payment. Okay, so the debts is the second thing that will tell us how much you're going to qualify for, and then the third and final thing that will tell us how much you're going to qualify for is how much money you have. Some mortgage programs allow for 0% down, some for 3, 5, etc. The more money you have for down payment, typically the more you're going to qualify for. But not necessarily always the case. Everyone's different, but having extra money in the bank is usually a good thing.
So we got to determine how much you qualify. We're looking at income, your debt. Your income is your gross income. Your debt is your minimum monthly obligation. How much every month you're obligated to pay, and your assets, how much money you got to invest in the property.
Correct.
So anything else that you guys are going to look at before you make your final decision?
Yeah, the last thing that we look at is the property. And this is the area where some people run into trouble. You think everything's great because your credit income is great, your debts are low, everything's fantastic, but the property now has issues. So we look at property condition is the first thing. Different loan programs have different condition requirements. And the other thing is comparable properties. It has to have, decent comparable properties that have sold in the area that can kind of justify the sale price. Okay, that's what the appraisal does. So the mortgage underwriter is going to look at the property appraisal and make sure that the house is worth what it's worth and it's in decent enough condition to pass the guidelines, and then that'll finish off your mortgage approval.
Okay, well, this is good information. So just to kind of recap where we are, qualify as credit and job history, how much you qualify, we got income, debt, and assets. And finally, the property's got to be worth what you're paying for it. If it's not worth what you're paying for it, the bank isn't going to lend you the money. So we do have specific videos, and check our channel down below, on each one of these categories. We get into a little bit more detail, so maybe we can answer some of your specific questions that you might have. But check our videos down below to answer those questions. And again, Jason, as always, I want to thank you for coming in and sharing what you know with us. And if you do have those questions, visit our websites below. Please comment, like, share, and subscribe to our channel. To your success, this is Don Thompson, real estate broker with the Pioneer Group. Have a great day.